going through life insurance applications. I'll share my screen here with you in just a second. I just want to make sure this YouTube audio doesn't conflict with us. So we will have
going through life.
we will have the recording live on YouTube literally right after we're done here. It'll be live on YouTube. If you guys don't have the YouTube channel, I'll make sure that I post it in the chat before we end tonight. As we do this, if we have not met, my name is Miguel Camargo. I'm a regional vice president with our financial services company. For the sake of compliance, I do not say the name of our company. So do me a favor, do not say the name of our company, just for compliance reasons, okay? I've been involved in financial services for 15 years, guys. The reason I teach these classes is because I did so well on the exam, Anna, that they invited me back 5 times to look at it again. And if you realize what that means is I did not pass my first 4 times. And on the 5th time, I passed it, right? And I vowed that if I ever get a team, I'm going to make sure I know that they have the support. And like I said, I will make sure I give you guys my all. I'm going to be here with you live for the next 5 nights. I'm going to encourage you guys to come back every night at 8 o'clock. The reason being is that there's a big difference between watching this on YouTube a week from now versus if you've already started studying, I can answer your questions here. But if you're just starting studying tonight, it's okay. If you haven't even looked at your material, it's okay. Because I'm going to give you everything you need to know. The one thing I cannot do for you is I cannot study for you. I'll give you all the information. You still got to pick up the books. You still got to listen to the videos. You even have to take the quizzes on your own. But I'm going to give you everything, Cameron, that I've got. Again, I do see a couple people who don't have their cameras on. Do me a favor, turn them on. The reason being is I think it's respectful that we continue to look at each other. And please be in a position seated to where you're not laying down. I've had some people in my meetings in the past, all of a sudden you hear them snoring. I'm like, who the heck is snoring right now? I know this information ain't the most attractive, but golly, at least show some respect, right? So I'm going to kick this stuff off. I do not like to have a whole flabbergast. Let's get straight to the point. The exam provider we're using is called ExamFX. This class is designed to teach you how to pass your exam. It's not designed to teach you how to become an expert in looking at policies and reading insurance and knowing terminology. For the most part, you will never use any of this stuff to make real money. Just like back in the day, I took the FCAT. Never use any of that stuff. Don't use Pythagorean theorem. Don't use War of 1812. Only thing I use is the knowledge we use, which is people skills, and we love all over our people. And it's so good to see Kevin's face. We're good to see Kevin's face. Again, I encourage you that you're using your laptops. Make sure you're using your laptops while we're doing this, taking notes. So let's go ahead and get started with this. If you have questions, please feel free to write them in the chat. I might not read them right away, but make sure you're taking notes while we're doing this. Okay. Before we jump into this, anybody have any specific questions or kind of any concerns before jumping into this? Because once I start, I'm going to keep going. No? Okay. So chapter 1 is introduction, is completing the application, underwriting, and delivering the policies. The important piece of this is when you're doing an application for a client or for a business owner, you're going to get generic information. The underwriting process is the background work the insurance company do. They go based off of medical records, your driving records, if you have any health issues. Also based off of how much coverage you're looking for. You have to qualify for insurance. It's not just something someone goes buys. And then delivering the policy, that's going to be based off of how do we deliver the policy? As an agent, what are you going to be doing? Okay, so let's kick this off right here. These are terminologies that we need to know. I'm not going to sit here and let you and speak every last one of these and expect you to write them all out as we go. I'm going to explain to you what they are, and you can come back and rewrite them as we go, okay? First step, or word that we want to look at is adverse selection. Adverse selection is ensuring the risk that are more prone to loss than average risk. Okay. Insurance companies, Camille, actually classify people's risk based off of their lifestyle. If someone's a smoker versus a non-smoker, obviously the smoker is going to pay a little bit more. If someone is a races motorcycles and they go a bunch of skydiving, their risk is going to be a lot higher. So insurance companies do something called adverse selection to find out which one is going to be best suited for the underwriting and the premium are going to be suited together, right? Let's look at agent producer. You are the agent. You are the person that represents the insurance company. As an agent, Anna, you are the first line of defense for the company. You do not represent the client. You are going to do what's in the best interest for the client. But at the end of the day, when you're writing a policy, you are doing what's best for the company that you write for. Another word for agent is called producer. So if you see the word agent / producer, that's just who you are. Another word for agent would be field underwriter, and we'll come across that word in a second. Applicant or proposed insured is a person applying for insurance. I know it's elementary that sounds. The person that's buying the policy is the applicant. They're the one that's applying for the coverage. Beneficiary. It's a person who receives the benefits of an insurance policy. The one thing about a beneficiary from an insurance standpoint is that you can leave the money to whoever you want to. You can leave it to your spouse, your mother-in-law, your cousins. You can leave it to a guy named Miguel that you met talking to you today. Just spell my name correctly, but no good. You can leave it to whoever. There's actually stories of where people actually leave money to their dog. I don't know how that works out. Maybe they don't like their family. They just said, hey, you know what? Good luck. The death benefit. I want you to write the word death benefit and then / next to that. I want you to write the word face amount. Death benefit / face amount. Those are words that you'll see very common. That is the amount of money that is paid upon the death of the insured. So most people actually don't recognize that the death benefit, when you get it from an insurance company, is tax-free. The government doesn't get any of the money. It doesn't go to your creditors. It goes directly to your beneficiary, and it's a tax-free check. Okay. Fraud is intentional misrepresentation. Just write that for now. For fraud, just write intentional misrepresentation. And then next to that, I want you to write the word to injure. These are key words that in chapter 3 and 4, what you're going to see again. On the word fraud, look at the word intentional misrepresentation and then write the word to injure. Okay. Insurance policies. An insurance policy is a contract between the policy owner and the insurance company, which they agree that the insured is going to pay the premium, and then the insurance company promises to pay the death benefit to the beneficiaries if God forbid something happens. It's a simple thing. Insurance contract covers the policy owner or the insured, and the insurance company promises to pay the death benefit, God forbid something happens. I know these things can be very elementary, but there are some people that just getting started. Insured, a person covered by the policy. The one thing about the insured, they don't have to be the policy owner. I'll give you an example, Camille. If you are paying for a policy on yourself, you're the policy owner and the insured.
Mm-hmm.
But if your parents take out a policy out on you, since they're paying for it, they're the policy owner and you're the insured. And vice versa. It could be your spouse. It could be your children. You'll see a word that we're going to come across here a little bit later. It's called insurable interest, which again defines who you could take life insurance out on. Anna, what you want to look at is the word insurer and principal. You want to write that word out. Insurer / principal. This is the company who issues the life insurance payments, or who issues the policy in general. Laura, there's one thing that we'll look out for is called lapse. This is when the policy termination happens due to non-payment. Now, let me share with you what happens if a policy lapses. If a policy lapses due to non-payment, their family is still covered for 30 days. That's called the grace period. We'll go into that in probably 3 chapters from now. Just kind of give you a little bit heads up. Policy termination due to non-payments. You don't have to start it over. You can reinstate it, which you just kind of pick up back off where you left off. Life insurance covers human lives. Pretty simple, right? Policy owner, the person entitled to exercise the rights and privileges of the policy. There are policies that are written that the policy owner dictates everything. We'll give you an example, Teresa. Let's just say you take out a policy out on Ernest, and Ernest is her son. You have control over the policy. If he says, "Hey, listen, Mom, I don't want you to have that much coverage on me," as long as he signed off on it right then and there, guess who can cancel the policy? You, only you. Sometimes I've heard disgruntled conversations of spouses saying, "Hey, I want to cancel my policy. I don't want him having coverage on me no more." Sorry, you signed the contract years ago. So the policy owner always has control over the policy. Premium, the amount of money to be paid to the insurance company. All right, any questions on that?
So a person that the policy owner, and the insured, so the insured cannot cancel the policy on by itself. It has to be the policy owner,
100%.
the one who signed the contract.
Correct. Then the insured would have signed the contract to get it going. But yes, after the policy is in force, they can't cancel the policy.
So Miguel, if the policy owner dies before the insured, then what happens?
Good question.
That is a very good question. If the policy owner, then the policy goes, so the policy owner passes away. So unless a new policy owner, unless they have to continue the payments, the insured could take over the new policy or take over the policy at that point.
Okay.
Yeah.
Okay.
But again, that where it comes into underwriting issues at that point. I'm sorry. Legally.
So basically the insured becomes to be the policy owner at that point.
Say that again.
Basically the policy, the insured becomes to be the policy owner.
Correct.
Okay, but it has to be after the underwriter review it and all the legal documentation is done.
No, because once the policy is enforced, I'll give you an example. I had a client during COVID. She had her dad had a policy on her. Dad passed away. She just took it over from there. It was nothing more but the documentation. Okay, no, there's no underwriting that has to go through there. So forgive me. All right, let's move on to the next part, contract law. Okay, let me just go through here and just scroll. Okay, we're going to give you a couple of acronyms. Write this down. Insurance. This is the definition of insurance. So Derek, you want to have this. Insurance is the transfer of loss from one individual or business entity to an insurance company. Give you a couple seconds to write that down. Insurance is the transfer of risk of loss. Obviously, insurance, you don't buy insurance to prevent loss or do anything. It just transfers the risk of it. If you get into a car accident and the person has insurance, hopefully, God forbid, hopefully they do, the insurance company covers the payment, not the person who was driving. Their policy would cover that. I just want to make sure we have that for sure. Cameron, yes, you're trying to ask a question?
Yes, sir. Just a quick question. Is the difference between an underwriter and a regular underwriter, the field underwriter is the person who gathers all the intel on the applicant, like pretty much their history and any risk that they may have, any discrepancies. And the regular underwriter is the person that the field underwriter sends the information to, correct? And the regular underwriter is the person who makes the decision on whether or not we're going to approve the applicant.
Okay, so let me get to that here in a second. Once we come across that, I'll answer that question for you.
Oh, my apologies, man.
No, you're fine. You're fine. Okay, so let's go to here. There's 4 ways to have the contract legal, Camille. It's this right here. You want to write it out. It's this accurate 4 legal elements of a contract. We're going to go through each of these individually. So if you just want to write it out as we go ahead. First one is offer and acceptance. This is when one party says, hey, listen, I agree to the insurance terms. I agree to the coverage and I agree to the premium. So Camille, let's just say you're sitting down with me. I'm the insurance agent and you say, hey, I want $250,000 of coverage. And do me a favor, guys, whoever has their TV on, please mute yourself in the background. So we're sitting down, Camille. You say, hey, I want $250,000 of coverage. You're going to submit the application, which we did. We answered all your medical questions. We answered all your banking. I'm sorry, your job. You got a clean record. Everything's good. You submit your application, which is the offer. The acceptance is when the insurance company approves the policy. They said, Camille, we don't really see you as much of a risk, so we accept your policy. That's called offer and acceptance. So you offer your application, the underwriter goes through their process and they accept it. That's the first part of an insurance contract. The second one is the binding force of anything. It's called consideration. This right here is the definition of consideration. Consideration is the promises to pay the loss if, God forbid, something happens. It's the insurance company promises to pay the loss if something happened, and the insured makes the payment, and all their statements of the applications are true. Again, and I'll give you a real life example on this. If I say, hey, I'm 35 years old, I'm healthy, I'm a non-smoker, but I'm a smoker, and I continue to pay the premiums, you approve the policy, the contract's binded, right? But I lied about my non-smoking. So the statements on my application would not be true. And we'll come across this, what would happen in that case. But the statements have to be true on the application for the policy to be valid. So that's the consideration. The insurance company promises to pay the death benefit in the event of loss, and then the insured or policy owner promised to pay the premiums.
So what happened in that situation if the application says that the customer is not a smoker and then ended up that at the end of the day the person smoked?
Well, there's
What
something.
happened with those benefits will not be paid or will be invalid, or what is going to happen to the beneficiary in that case?
I'm actually setting that up for later in the chapter. I'm going to make sure I come back to that.
Okay,
I'm giving you stories to help you remember these things,
okay.
but I'll make sure I answer these for you. The next one is competent parties. This right here, hey, you just got to be a legal age, mentally competent, understand the contract, and not be under the influence. So competent party is be competent. There is just a side note in the state of Florida. I know we have people all around the country, but in the state of Florida, you can be the legal age of 15 years old to get an insurance policy. So when it says legal age, I know sometimes we say, oh, they must be 18. State of Florida, 15 years old. Just make a side note of that because we will see that later in the chapters. And what you'll do, Anna, you'll hear me start repeating a lot of stuff that 3 chapters from now, you'll be like, oh, I remember Miguel said this just to plant the seed. So we'll come back to it. And then the legal purpose, which is the 4th one, is the purpose of the contract must be legal and not against public policy. So to ensure a legal purpose, for example, they must have insurable interest and consent. Let me give you what insurable interest is. I'm pretty sure we're going to come across the definition here shortly. Insurable interest, though, is where there has to be something of loss if someone passed away. See, Anna, you and I are not related, so I can't take out an insurance policy on you, right? I can take out legally, and you each individually can take out a policy out on your children, your parents, your grandparents, and your spouse and yourself. And a business owner. I'm sorry, a business partner. You cannot take out a policy on a homeless person, Cameron. Can't just be going up straight downtown. Trust me, I'm pretty sure someone's trying to do that. Grandchildren too, if you take care of them. If in some capacity you can take care of them, if you take care of them. Okay. So contract of adhesion. I want you to write the word take it or leave it. So contract of adhesion, and the word I want you to write is take it or leave it. And I'm going to give you the definition of that in a second, but I want to help you understand what this means. Contract of adhesion simply means that, Camille, if you apply for $250,000 of coverage and we say the premium's $50 a month, you can't say, well, listen, I only got 35. No, it's $50 a month. There's no negotiations.
Okay.
All the power is in the insurance company's hands. They say, hey, listen, this is what we're going to offer you. This is the premium. Take it or leave it. Pretty straightforward. Okay. This one, aleatory. What I don't know how to say this word sometimes. That word right there. The word, this is the definition, which means is an unequal exchange of values. And to give you an example of that is if Anna, you have $100,000 insurance policy on yourself and you're paying $100 a month. Who's taking the bigger risk? You or the insurance company? Or Camille?
I would say the insurance company on that one.
Yeah, the insurance company's taking the risk because you're betting $100 every month that you're not going to die, or that you're going to die. And the insurance company says, hey, I bet you $100,000 you're not going to die. It's unequal exchange in values. It's really morbid when you think of insurance, how you pay for it. You're like, I bet I am. They'll say, I bet you're not. And they get every month, they want their money. But that's just simply how life insurance works. It's unequal exchange. Okay, we're heading down here. Okay, the next one is unilateral. I want you to write this entire thing. Okay, here we go. So write that entire sentence out. Unilateral contract. Teresa, this means that one party is obligated legally to the contract, which is the insurance company. The moment the insurance company issues the within the scope of their exclusions, if someone passes away, they have to pay that money. They can't cancel your policy because you got sick or because you got ill. Once it's in force, they can't cancel it. But you as the policy owner, you can cancel them at any time. If you say, hey, I don't want my policy no more, you just cancel it. So you can cancel them, they can't cancel you. Any questions on that? Nope. Okay. All right, so move on to the next one. It's conditional contract. Conditional contract requires that certain conditions must be met by the policy owner and that the company, in order for the contract to be executed, must fulfill both obligations. Which again, in this situation, it would be the insured pays the premiums, and if God forbid they pass away, they can provide proof of loss of the person that passed away. So in order for them to get the money, they have had to pay the money, Denzel, and they have had to show proof that that person actually passed away. Okay. Any questions on this so far? Kevin, Gene, any questions?
Nope, no questions.
Okay, guys. All right. So the next one is warranty. A warranty is an absolutely true statement upon which is the validity of the life insurance policy depends on. So simply is this. Dewana, if you say, hey, listen, I'm a non-smoker, they're taking your word for it. Unless they can prove that you're a non-smoker, I'm sorry, that you're a smoker, they're saying, hey, guess what? We're going to take your word for that. So, Anna, this is going to come back to your question. What would happen if something happens? Well, breach of warranties may be considered grounds for voiding the policy or return of premium. Because such a strict definition relies on the applicant's word, then they're just going to go based off of that. Unless you already have something in your medical record saying, hey, you know what, you are a smoker. Or if you do a medical exam and they still happen to find nicotine or tobacco in your blood and urine, well, then that's not going to completely cancel the policy. They're just going to increase your premiums. But Anna, if someone passed away within the first 2 years and the insurance company can prove that you lied on the application, your family's not getting that money because they lied on the original application. Okay. So we're going to cover a little bit more into that. That's called the incontestable period.
One question on that one. If the person is, let's say that is, give the correct information on the application at the time that it was filled out, but later on the person started smoking or drinks or whatever, and they find out that this person didn't lie, but was using it later after the application. Would that also validate it, or they will invalidate the application?
No.
How will it work?
Thank you for asking that question. No, it's only at the time of the application. So if you were a non-smoker and let's just say you were a non-smoker, but 3 years down the road you started smoking, no, it's what it is. Someone became a crackhead afterwards. It happens. Life is stressful.
But I noticed you said 3 years instead of 2 years, and you said the 2 years is the
We'll cover that a little bit more in
period.
detail. Yeah, I'm going to come back into that. So representations are believed to be true of one's best knowledge, but they are not guaranteed to be true. For insurance purposes, representations are answered, or the answers give to the questions that are answered from the applicant. So untrue statements are considered misrepresentation and could void the contract. I got ahead of myself. I essentially already covered that already. Any questions on this so far?
I do have a question as far as like warranty and representation. So would a warranty be I never had chickenpox, and a representation, and would a representation be I think I never had chickenpox? Is that it?
No. Chickenpox wouldn't be the best example to use in that situation. No, it's right there in the definition. It's an absolute true statement upon validity that the policy depends on. If you lied about it and they can prove it, the policy is voided. Representations are going based off of your word.
Okay,
Yeah.
gotcha.
All right, let's go on to the next part. Completing the application. Okay, we're getting to the meat of it here, but we're honestly probably about halfway through now, guys. So completing the application, when you are the agent and you're sitting down with the client, everything's electronic these days. But in the first part of the application, it's general information and medical information. So general information is going to be your name, your age, your date of birth, your gender, your income, marital status, occupation. So they're just trying to get a good note. Hey, do you have a home? Do you make the income? Where do you work? What kind of work do you do? And you're also going to inquire, hey, do you currently have any other existing policies in place? A person can have as many life insurance policies as they want, Cameron. So if you want to take out 10 policies on yourself, you can do that. But as the agent, you have to note if you're going to replace that policy with a new one. So if someone has a policy at State Farm and they're going to go to Allstate, it's the agent, Allstate's agent responsibility to, hey, we're going to make a notice of this. Because on the back end, Allstate's going to send a letter to State Farm saying, hey, we are replacing this policy. Not something you're required to do. It's just you want to get as much information as possible. There are times, Camille, when you're going to say, oh, you're going to sit down with someone and they have a policy. They can't find it. You just do your best to collect as much information as possible. It's not a deal breaker. The second part of the application, Laura, is the medical information. This right here is where it's crucial. Some people like to say, hey, I don't want to buy life insurance now. I'm healthy, I'm young, nothing's going to happen to me. But how many times have we seen people go to the doctor and all of a sudden they're sick? Now an insurance company ain't touching them. So this is why we always express it's better to get life insurance while you're young and you're healthy, because you can get approved of it. See, Camille, let me ask you a question. Are we going to get any younger than we are today? No. Are we going to get any healthier than we are today?
Maybe.
Most of the time, statistically, no, we're not going to get healthier. We're going to, listen, once you turn 30, them knees start to go out.
Yeah. Don't say that. I just turned 30.
Me too.
Look at that. Now that is everybody, a bunch of young people on this call, Laura. All right. So, you're not going to get any healthier or younger than you are. So when you go through the medical process, what's going to happen is that you're going to ask questions. Hey, what's your height? What's your weight? In the last 10 years, and this is what insurance companies are looking for, they're going to look back in the last 10 years. Have you had any real major medical issues? Are you on any medication? Have you had any DUIs? Have you had any felony charges? Are you doing any crazy activities like scuba diving, mountain climbing, parachuting, hang gliding, racing in the automobiles? That's what they're looking at, right? That's what the medical exam and non-medical stuff. So I'll give you an example. If a client has had cancer in 10 years and they're still on some type of medication, they're probably not going to get approved of a policy. But if a person had cancer 15 years ago and they're not on any type of remission, they're not on any kind of medication, the possibility of them getting approved is actually higher because it's been past 10 years. Does that make sense?
Mhm.
I'm giving you things that might not be on the exam, but I just want you to think of this. This is, as an agent, this is your responsibility to know. As an agent, it is your responsibility to make sure everything's filled out completely. Everything's electronic these days. They ain't gonna let you go to the next screen unless everything's filled out correctly. I know back in the day, Laura, we had to write things on paper and had to fax it in, put it on a pigeon, and fly it across the what are those things called? Those Starbirds? What I don't even know the name of those things. Okay, Cameron, here we go. Here comes your answer. The agent's company front line is referred as the field agent.
Mm.
You, as the agent, are the field underwriter. Meaning, when you're sitting down with somebody and they say, "Hey, listen, what's your height and weight?" And they say, "I'm 150." And I'm gonna pick on a guy because I'm not gonna do this stuff with women. So Cameron, you say, "Hey, listen, I'm 150," but I'm looking at you like you double that. You ain't no 150. It's my job. It's your job as the agent. Say, "Nah, this boy lying." Um, it is your job to look at that. And
Look at
listen,
discrepancies, I guess.
yeah. So again, if someone says, "Hey, listen, I'm a non-smoker," but you see them on a freaking breathing machine, you're lying. Or maybe not me breathing lying about smoker, but you kind of look out for the small things, right? Um, so that's the field underwriter's job. The underwriting situation, besides going through your medical records, the underwriting is going to be based off of most of the application, Anna. So whatever you put in the application, that's what the insurance company is going based off of, whether or not they're going to approve the policy or not. So there you go. It's here we go here. Agents, producers' responsibilities, agents' personal observations concerning proposed insured, whether the agent knows adverse information about the applicant. I'm gonna give you a disclaimer. This is what I tell people. You do what you want with it. I tell people I'm your friend that does insurance. I'm not your insurance agent. That's your friend. I'm always real with people. You follow me? When you get to know people and you do business, you don't want to be known as the insurance agent. There's nothing wrong with it, but you want to be known as people's friends. You get a lot more business that way. All right, so let's talk about, Camille, what are the things that you're responsible to do? You're responsible to get all signatures for the application. I'm gonna cliff notes this right here. This simply says that the gosh, what my brain's going crazy. I'm just going to read it. If the insured and the policy owner are not the same person, such as a business's purchasing insurance on an employee, then the policy owner must also sign the application. Okay. I don't know if you guys know this. Back in the day, Walmart was taking out a bunch of life insurance out on their employees. Crazy, ain't it? I don't know how they were cashing in on that, but somehow they were doing that.
Yeah, they were doing that, and also they were doing the accident policy. I work for Allstate, which Allstate handled the Walmart policies, and I was working on claims. So I was processing the claims, and yeah, they did a lot of crazy policies
Look at that.
for the employees.
Look at that. Walmart being shady, bro. They just said, "Hey, we ain't gonna pay you enough either, and we're gonna cash out
Yeah.
on you. Don't worry."
Yeah.
Mm.
All right. So it's required to get all signatures, changes of the application. Okay. So this is going back to doing paper. You know, like if you go to a bank and you mess up on a legal document, you can't just scratch it out. You have to do one line. The client's got a signature, initial, and then they have to date it. If you ever have a mistake on a policy on paper app, you cannot erase it. You can't white out. You have to do, excuse me, you have to do a line through it with an initial, just like any kind of banking information or bank document if you go into the bank and deposit money. If you still do that kind of stuff like I do. Okay. Consequences of an incomplete application. Again, this doesn't really happen these days because everything's electronic. But this says, Camille, that before a policy is issued, all questions on the application must be answered. If the insured receives an incomplete application, it must return to get all signatures. But here's one. If a policy is issued with questions left unanswered, the contract will be interpreted as if the rights were waived to have the questions answered. I don't know how or when this would happen, but let's just say you and I are sitting down and I missed over a medical question. And for whatever reason, the insurance company still issued the policy. They can't go back and renege on it. They have to, it's considered waived. It says the insurer will not have the right to deny coverage based on the information that was unanswered that might have contained. Again, Cameron, that really doesn't happen today. Okay. So this one right here, Gia, you want to know this. Premium receipts. This is back in the day when I was doing paper apps. If I wrote a policy, I would have to leave a copy of whatever they paid in the form of a receipt. Pretty simple. The one that you want to know is called conditional receipt. Let me find conditional receipt. This is the definition of it. Is used when an applicant submits a prepaid application. So, Camille, there's two ways to submit a policy. You can submit the policy with money up front. When you do that, you are conditionally covered, which means that if God forbid something happens to you between the day you wrote the application to till the day it was getting issued. If anyone had passed away in that time period, your family would still get the money if they found out the policy was going to get issued. Or you could submit the application with no money. If you submit the application with no money, you're not covered. But if you submit the application with money, you're conditionally covered, which means you get a conditional receipt.
Even if that application has not been approved by the underwriter?
100%. You're covered immediately, conditionally. And if something happens in between then and when the policy is issued, the family would still get the money as long as the policy was going to get issued. Okay. Like I think they should have conditional receipts for Androids. Like conditionally, if you don't like them things, take them things back.
I'm gonna need you to get off the Android, bro. Cause them apples, them worms be eating holes in them apples.
No.
Hey.
All right. So we'll look over here. We're talking about replacing. We're going to replace those Androids with Apple, right? So if we're replacing a policy, right? So Camille,
Yeah.
if we were to replace a policy and terminating it, so you are sitting down with a client and they have State Farm or New York Life, and you're switching them to your policy, that is known as replacement. If you're just getting a policy, sitting down with a client and they're adding a policy, it's not considered replacement. You're just adding it. And if they decide to cancel their other one at a later time, it has nothing to do with you. And let me tell you the compliant reasons behind this is you as the agent must always do what's in the best interest for the policy owner. I wish we could say that the industry is like that. There's a lot of policy, commission hungry, driven salespeople. I see them all over TikTok. Well, they'll try to sell you one thing when it doesn't fit best. Because can we agree, not everyone's situation is the same. We might sit down with a client and we might not have what they need. We shouldn't just write a policy just because we want to get paid. We don't want to do that. We want to do what's always best for the client 100% of the time.
Mhm.
All right. Any questions on this? Nope. All right. Let's move on to underwriting. This one's going to go by pretty fast. Yep. All right. So I kind of touched about this already. This right here is the definition of underwriting, if you want to write it down. Underwriting is the risk selection classification process. All right. So underwriting, we already talked about this, Cameron. You're the field underwriter. Talked about that already. Let me talk about insurable interest again. Insurable interest. This must occur at the time of the application. Okay. I'm giving you the keywords. Insurable interest must only occur at the time of the application. Meaning, if you got a policy out on your spouse, and then 10 years later, he decides to dip, you still keep that policy. Because when his ass falls to the ground, cash in on this one. Not saying that's the way to look at it, but hey, you spent years with him anyways. Might as well. D.K. Kirkland says this: death should not be a tragedy. It should be a come up for somebody. All right. So when should insurable interest matter, right? Who can get a policy on each other? You can get a policy and on your own life. If you want to take out a policy on yourself, you can do that. The life of a family member. This is going to be immediate family only. I kind of mentioned this. A spouse or close blood relative. That's going to be your parent, your grandparents, your children. I tried to take out a policy out of my brother years ago. He's a freaking drug addict. I was like, man, I got to take a policy on this guy. And then they denied it. I'm like, oh man, I know I can do that. I had to eat that charge back too when I wrote it. I'm like, oh, okay, well, whatever. So let's talk about this one right here. You can also take out a policy on a business owner. Teresa, let's just say you and I go open up a business together and we take out our insurance policy on each other.
Right.
And for whatever reason, we dissolve the business 5 years down the road.
Mm-hmm.
As long as we keep paying those premiums,
Yep.
if one of us passes,
Mm-hmm.
you get to cash in on that.
Yep.
So that's the point of where we're talking about at the time of the application. The business doesn't have to be enforced anymore. It's just at the time of the application. Another form would be a key employee. And I'll go into detail on this probably tomorrow or Wednesday on what this stuff works in. Sources of underwriting, we talked about this. The main source of underwriting is the application. The insurance application is the main key source of underwriting. Boom, boom, boom. So this right here is some third-party underwriting that happens here. You will see questions on the exam like this, Anna. It's called the Investigative Consumer Report. This is to supplement information on the application. The underwriter may